Welcome back to another episode of the Backholder Pod. So I think as always, whenever there's new developments around the Chinese economy or the Chinese stock market, the three of them always say, "Hey, Chi Keng, share your views there faster." Later the topic not new already. So I think just for some context, for those of you who haven't been following, just last week before the year, oh yeah, forgotten to wish everybody a happy new year. But anyhow, our biggest gift from the Chinese government back then was that they recently released a new regulation, or at least a draft, saying how they're going to clamp down on some practices in the gaming industry, which basically caused havoc in the gaming stocks, specifically Tencent and NetEase. If you were to chart back, I'm looking at their price action. I think Tencent was down a good 12-15%, while NetEase was down around 20%, just a single day. And it was basically only the release of a drafted regulation, means that nothing is enforced. And then following that weekend, we actually see that the regulators actually come out and say, "Oh, guys, we are gonna take into account what the businesses have to say." They are trying to basically appease the market, and we basically see that I think from the bottom, Tencent. I never really followed NetEase, but from Tencent alone, that one day they gapped down from 320 to 263. Um, but closed back in 274, and right now they're trading closer to $300. I'm talking about it in Hong Kong dollars per share. So you can see there's huge volatility around the market. And I think the biggest reason around the space now is really this idea of policy flip flopping, because we've seen that the entire crackdown started back in 2020, and within that short span of 2 years, there was a slew of different regulations from gaming approval to algorithm manipulation, trying to get them in line, and more importantly, the idea of competition. But right now, it seems like the biggest issue that we have at hand is really the idea of capping spending on some of these games. And I'm saying that you only can spend X amount of dollars, even though the amount is unknown now. But because of this uncertainty, a lot of question marks, that's why basically everybody is just selling down. The idea of flip flopping comes when I think just a few months ago, the government actually came out to make a statement saying that, oh, they're gonna continue supporting the tech economy. They say that they are kind of done with the regulation, and then right after that, basically this draft regulation came out. Everybody got scared. There was a lot of confusion, and that's where we are today, right now. So yeah, I guess that's a brief summary and context. So we'll carry on with the discussion, Bunti.
Yeah. So I saw that the price dropped quite a fair bit on that day. And then since then, as of the time of recording, I think it recovered about half of the big drop that we experienced on the day. So now it's not like back to normal yet, but there's some recovery there. But I think we have quite a long discussion on like what's the impact coming from these regulations, right? So okay, first we need to be more specific because these regulations is going after the gaming business, and the two largest one is Tencent and NetEase. But I think because Chi Keng and myself, we both own Tencent company, so mostly just talk about Tencent, the big one. I know in China it's not like just two gaming companies. There are many smaller one, but let's focus on the big one now. So I think the topics that we debated was that okay, these regulations, assuming it go into effects, right? How much impact would it have to the fundamentals of the companies now? And I think there we have a bit of disagreement in terms of like will it have some negative impact or not? And I think Chicken, you also mentioned that probably the impact will be very small or minor, or even it can help the industry, right? So maybe Chicken, you can like expand a little bit more on what you are thinking there.
Uh, Actually, I didn't say there's no impact, but I think it depends on the time frame again, short term versus long term. I think this whole issue of crackdown is not necessarily targeted at one company specifically. I didn't say that, oh, only Tencent games cannot be approved or cannot be spent. So it will affect the entire industry by and large. So when we look at it from Tencent's perspective, around, if I'm not wrong, around 20% of their revenue is from the domestic games. And we actually see, if we chart the progress over the last 3 or 4 quarters, funnily enough, it's their domestic games that is actually on a decline, while their international games is slowly taking over. But that said, the domestic games still a significant part of the business itself. So I'm not going to deny that fact. So then backs the question on why I think in the longer term, this whole thing will normalize. My main argument is simply that there's this Chinese saying, right? 上有政策,下有对策. Basically, when there's a new regulation coming out from the top, people below will come up with very interesting ways to try to circumvent many of these policies or whatnot. This has been played out in many other places as well. So I give you a prime example. I think the entire NVIDIA chip ban, you see, they say that they cannot sell to China, and then a few weeks later, boom, they come out with a new chip and then say that, oh, this is specifically made to circumvent or to make sure that they are in line with the law or regulations and whatnot. So similarly, I think when they came out with the one of the draft regulation, if I remember correctly, was that they must stop um, doing daily login rewards, something like that, meaning they cannot log in every day to collect coins or collect points. I think this is a very interesting way to erect some sort of ban because this is very specific. So when the games, I believe the developers can come up with more interesting ways to play around with this thing so that to still instill some sort of loyalty. That's one. I think second one, they were saying that you also have to remove some sort of introductory pricing, meaning let's say if you spend every day, I give you some sort of multiplier. I think those regulations are to kind of increase people's impulse to spend every day lah, spend consistently. I think those ways are funnily enough too specific to a point where I think developers are or the way they price their offerings they are able to find some way to kind of resolve it down the line. But then back to my main argument, I think when we were talking to Bunti about it was that I think my logic was simple. I believe that game as a percentage of expenditure of the entire economy is X percent. I don't have the data at hand, but I agree that there's a certain percentage of impulse buying, which the Chinese government is trying to stop. But at the end of the day, after the cut in this X amount of percent, they will spend other places. But over time, I believe that this percentage will normalize back to X percent again. So X minus Y percent, which is the impulse buying. And then maybe they impulse buy in e-commerce, impulse buy in other places. And then everybody will revert back again to this X percent. This is my theory at least. I don't have the numbers at hand. That's one. And number two, of course, the discussion about how they're able to find new ways or more innovative ways to try to circumvent it. I think that's the 2 points that were my main arguments.
I want to just give some perspective on the bans lah. As a ex-game developer, first of all, the daily login thing is actually not that huge because if you want to play the game, you wouldn't need that daily login thing anyway. That daily login thing is more to entice people who seldom play the game to just like, hey, come back today lah, come back and play some daily missions and collect some daily rewards. So it only affects people who are playing much more casually lah, basically. Then the other one is to stop the gachas. That basically is a loot box. Or in Japan they call it gacha lah. In Singapore it's also called gacha. Gacha games are banned in Japan already. In Singapore, the gacha, the machine, sort of where you go through is in all those shopping malls, those are actually banned in physical gachas lah, for Singapore. For games, not so much yet. So China is just following what Japan is doing right now, where they are banning gacha, which I personally, I hate gachas lah. Because you will spend a lot of money and you wouldn't get the stuff that you want. So to me, it's a good thing. To companies, I guess that's a bad thing because it would represent a drop in revenue. So like what Chi Keng say, they will just find ways to go around this law. If you can't give daily lock-in, there are other quests. You can add in certain mechanics like certain quests that can refresh up the while. So in essence, it's also another form of daily lock-in, but you have to do certain tasks instead of just clicking. For gachas, if you can just price the thing accordingly, then people will just buy the thing straight away. Then you will avoid the gacha thing altogether already. So yeah, there's certain impact but it's not a huge thing. It can be circumvented.
So this gacha thing is like a gambling sort of thing, right? You put in a coin and then randomly you get some sort of a reward, which may or may not be what you want.
Yeah.
there was one nuance that was released in the paper as well, the draft paper. I think the idea of gacha is because it's a fixed, it's a very small percentage. So let's say they sometimes they can put it at 1%. Then during event periods, they can bump it up to 2% to encourage people to spend more. But I think there was one sentence that said that all games should fix at a certain percentage and it has to be fixed throughout. Meaning I think cannot be too low so that they don't instigate more people to spend more money. So I think there are some rare items that are like point something something percent, and then people need to keep spending money. But then right now they are trying to discover or uncover what's the good amount. So which is why there's a lot of things that we don't have the details. The second thing, so number one is the gacha percentage. That's one. The second thing is about the amount of money people can spend. I think actually this is my biggest concern out of the entire draft regulations, that today, if you tell me that every gamer, however much you earn outside, and then you can spend the money, that's your free will. I mean, that's capitalism, right? You have to spend money wherever you want. But if today the government or the regulator steps in and say that, oh, every day or every month you only can spend, let's say, 1,000 renminbi on a game, I think that's a bigger impact on the revenue because it immediately caps the how big or how much the company can grow. And but on the second flip side is that I believe, like I said, the whole Chinese saying again on how people will move around this whole thing, right? I think there was a group member in Bunti's group. I think YCX was also saying when you implement something like that, a black market will inevitably come out. People will start using their parents' account and then they pump money and then they try to spin the thing and then they will create an entire ecosystem outside the game. And then it's even harder to regulate after that because people are trying to move around as we know, gamers that want to game or gamers that want their things, they'll somehow or another get their things. And then if you try to limit it via their WeChat ID, they will find that I'll use my mom's one, I'll use my dad's one, and then I'll try to gacha the thing. And then I'll find ways to transfer each other, and then I will buy it from other place via black market. So I think it creates a whole slew of problems, I think, down the line. And I'm not too sure how well thought out this entire strategy is when they go into it. But at least for now, I think nothing is set in stone. They say that the 22nd of January would be the timeline where they get feedback or things from developers, from the gamers, and then they will implement accordingly or adjust accordingly.
Actually, I'm quite curious because the last time when they have this gaming crackdown, right? I think I think the tagline back then was that they say that they are not allowing minors to play games. So below certain age you can't play, and then you can only play during weekend, not weekdays. There's restriction on that front. That's like 1 or 2 years ago, and then just within like 1 year plus, then suddenly they come up with the new regulations crackdown on spending. But that's the thing, right? We can argue that whatever that they come up with now maybe have like limited impact, small impact, or they can work around. But we don't know, like, okay, let's say after this round, right? Will it be like, okay, another 18 months later, then another round of crackdown and another round of crackdown? And all these companies, they are, like companies like NetEase, Tencent, they are tech companies, right? They need to focus their resources on develop something that is more value added to the customers and also to attract new customer and compete globally, right? And if on their domestic market, they have to, keep fending off the government, keep changing this and that just to please the government. And then, they if they spend out too much resources on this area, would that be like, negative to the companies? For example, affecting their ability to compete with other global companies. Is that your concern? Just want to ask, like, I mean, Chi Keng and the rest of like how do you see this kind of like government intervention? Is it like net positive or is it true that these are really net negative for the shareholders, at least? Maybe good for the people, but bad for the shareholders.
I would like to hear your response after mine. But I think generally for mine, this was the same line of thought for when Adam said that he sold. Oh, by the way, for those of you who haven't catch it yet, I think Adam sold out his entire Tencent position. He was also making the same claim that, oh, the government has always been on their back. Gaming as an industry is not very healthy. It's not viewed in good light. That's why, because of this structural policy issue, he sold out of his Tencent position. At least for myself, I do understand there's a lot of frustration amongst the community or the retail investing community that, oh, I thought you guys are already done. How come you come back again? So there was this inconsistency, I guess, in terms of policy action, because the top, I mean, Akong already say, hey guys, we are going to support tech company, the digital economy. Then after 1 or 2 months or a few weeks, then suddenly somebody below came out. The funny thing is, actually, because of this policy inconsistency, I was speculating lah amongst my own friends that it was somebody in middle management that screwed up. And I guess yesterday there was this news that came out that they removed actually one of the government officials um, after this whole market turmoil thing. So it seems to me, at least, what they're trying to do here is to get somebody responsible for this. I mean, at least for myself, I do think that at least the Chinese government prides themselves in being very consistent because they are one governing body. They don't have a lot of issues of debating and wasting time and a lot of inefficiencies, right? But yet at the same time, when they come out not a united front, when one body says something and the other body says another thing, somebody has to answer. So in this case, somebody from the bottom rung answered because he basically go against or he wasn't following instructions. And I would believe that it's a discretionary decision, meaning somebody in the middle decided that, hey, let's go ahead with this without consulting or I don't know, he didn't read the memo from the top. So this is at least how I interpret the whole situation. I think greater clarity will come on the 22nd when they actually finalize this whole regulation. So then now I'll ask back Punti though. If on the 22nd, the final regulation comes through and most of the things that we are worried of actually didn't go through lah. It's a renewed whole new regulation. What would be your thoughts on this whole episode of the government flip-flopping?
Depending on what's the questions, right? Because if you ask me like, okay, if they do all these things and then basically back to square one, nothing happened, right? Let's say if its share price is still low, I think it makes a lot of sense to say, okay, let's add to the position and take advantage on this, because it's true that the government is still supportive of the sector, and now the company is cheap, right? So I think that is a good argument. It's just that I think you need to consider on the trust also, because right now I think what companies like Tencent lack is not about their strength, it's not about their resources, it is about the entire landscape they're in, which is the government regulations. Actually, I had a chat with a friend last month, and briefly talk about like investing in Chinese companies, Alibaba, Tencent, and other companies, right? And the person, my friend mentioned to me is that actually it's not about whatever regulations that is in place now. It's more about like the uncertainty, like the government can do anything anytime, right? So many people cannot take that, and they will just say, okay, the world is big, right? I have so many companies to invest. Why should I just put my money in Chinese companies which subject to all these sudden regulations out of nowhere? And can you take it or not? I think that is the questions that we are all asking now. Okay, that's on to answer your questions.
I just want to say that as a bystander, because I've not been invested in Chinese stocks, I'm just looking at how the government always is like playing whack-a-mole lah. I don't know how else to put it. Like you will go after the gaming sector, then after that, another thing pops up in the real estate. Whack them. 3 red lines. Then after that, the education tuition sector. Too much studying, stressful. Whack them. Then after that, gaming sector again, pop up again. Then whack them again. So they are like coming out with regulations every now and then, like circling all these sectors. I think the net result that I see from the side, right, from the sidelines, is I see that it negatively affects the share price over like the long term, like is maybe 2-3 years, that kind of thing. From the time I started observing like all these crackdowns and all that. So regardless of the business or whatnot, right, I think this crackdown, like to shareholders, it may not be a good thing lah. It means that to the government, right, is always what they think is in the people's interest, then they will act according to that. Like they don't really bother about like, okay, stock market go down or investor feel that you're not business friendly. They don't really care about that.
Actually, I talked to another group of friends, which are mostly pro China, right? Actually, they say this as a bystander and you say they are playing this whack-a-mole, right? Actually, that is for someone who don't pay attention to the regulation in China. For those who are paying a lot of attention and those who follow the regulations, right? Actually, they know that all these things are coming. And actually, Chinese government is also very consistent in terms of what are the areas or industry that they are supporting and what are the areas that they want to whack. And even for the property one, it's known that they want to whack that sector for quite some time. It's just that maybe there's some, it's a timing thing. It's not like they support it for a few years, then they come and whack it. It's not like that. It's more like they want to do all these things. It's just that they take like different time, they whack different places lah. So for gaming, right? Definitely this is not a sector that they want to develop a lot because of all this negative impact to the peoples lah. So that's something that are consistent. And actually, I attended one talk from very prominent Chinese investors, and they say very clearly, the firms, right, when they invest monies in Chinese companies, the first question that is asked is that whether that's company or that sector, right, actually in line with the government intention. If it is somewhere that the government want to support, right, say for example like solar business, the electric vehicles, these are the areas or industry that get a lot of support. And then in terms of infrastructure, the government also push a lot of infrastructure build just to support those companies. That's why we have like, for example, BYD that overtake Tesla, right? Because of all this infrastructure around it. But there are sectors that like if you invest in those sectors, good luck. So that's the environment in China. You need to listen to the governments now. And there are people who are very, they know in details like all these things. It's not a surprise for them now. It's only a surprise for people like us who only read Western media now. Yeah.
So to add on, right, is e-commerce a supported business?
I wouldn't say whether like e-commerce is supported or not, because e-commerce is part of commerce, right? So definitely people need to like buy their stuff, whether you buy it in physical stores or you buy it online. I think that's all part of commerce. Of course, they are supportive of commerce,
So
but what they are not supportive is that the way some of these e-commerce business doing their business. So the Alibaba crackdown that we experienced in the past was that they play all these monopoly tactics, right? Which is bad for the consumers. But I mean, this is not something that they tolerate. That's why they whack Alibaba. It's not about like whacking e-commerce, it's whack practices, certain practices.
I think there are certain practices that are very common in business, no matter you're from Singapore or from China. If you're a businessman, you know that sometimes you have to squash your competition, whether is it by competitive pricing or by some certain incentive that you give to your vendors or whatnot. These things happen all over the world. So my question was, if e-commerce is sort of like neutral, neither supported or not supported, right? When as a shareholder or as an investor, right, do you know that the company you're going to invest in have this kind of undesirable practices that will be whacked by the government?
But generally speaking, right, like every regulators in the world, they are not supportive of monopoly, right? Say for example, like in US, you still have all these antitrust. Let's say if you are getting too strong, the government will do something. For example, like I look at like chip industry for quite some time, right? Last time Intel used to be very, very dominant, and they invented this x86 architecture, and the whole PC industry, they're all using just one architecture, which is the x86, right? And the government actually forced Intel to license that architecture to AMD, so that you are not left with only one supplier or one company. Last time, Intel, one company is one industry. The entire semicon is Intel. Intel is semicon. But government will do something just to make sure that they don't have monopoly. So come to China, I think it's the same thing. The regulators, they don't want to see monopoly because this is bad for the consumer. It's just that how they do that, where they draw the line, how they encourage or discourage companies from doing certain things or do certain things, right? They when it comes to tactics wise, I think if you compare Chinese versus US companies versus Europe, they are very different. It's just that the intention, they are all the same. Like monopoly, no good. That's quite simple, right?
I'll quote the 14 5-year plan. On point number 6, manufacturing and digitalization gain prominence. Cloud computing, big data, internet, blockchain, artificial intelligence, and VR AR will be supported. I don't know whether I'll answer a question for both Tencent and Alibaba.
Wait, you mentioned e-commerce just now?
No.
So e-commerce is not in.
No, they didn't. They didn't. I think e-commerce actually comes under the internet umbrella. Cloud computing, big data, internet, blockchain, AI, and BRAR. Actually, this is basically where all US big companies, your big tech companies, are all going. This report came out in 2021, by the way. So I don't know who's taking the lead. Whether is it the Chinese government that say already, then the big tech came back, or the big tech came first, and then I don't know. I think I'll leave it up to the viewers to decide.
I have a follow-up question for Chi Keng. So for Adam Khoo, right, he said he sold China. Then I went to check. China is about 33% of the portfolio. Which I guess is not too bad. It's still
Sorry,
diversified.
33%.
33%.
Of
According to
whose
online source.
portfolio?
Adam Khoo lah. Adam Khoo.
No lah, no. His percentage is the online source fake news lah. His percentage is I think 4-5%.
Okay. So
Yeah.
4-5%, right? So people were giving him a lot of flack. Oh, you picked the wrong stocks. But actually, it's just a very small percentage. He lose 5%. Probably he can just make that by doing another course already. But I guess for Chi Keng, right? So here's the question, right? What's the percentage of China on your end?
Sorry, I need to clarify again. Adam didn't sell everything China. He sold only Tencent. So actually, he holds Baba, JD, Bank of China. He holds quite a few Chinese position. But I think in aggregate, the Chinese position is around 5-6%. But when he trimmed Tencent, because he has like I think thousands of shares in Tencent, but he sold everything lah on that big drop. So he trimmed off 1%. So I believe he has 4% left, which is in the other names. That might be in Bunti's terms or in Eric's terms much more neutral, because gaming is seen as not a very favorable industry to be in. But then again, actually my main investing thesis for Tencent is actually WeChat. It's the driver for basically all businesses in China today. If I own Baba and Tencent, I basically own the entire digital economy. I mean, that was my initial thesis lah. I don't know what's Adam's thought process. He need to defend himself, but yeah, that's my perspective. Now back to answering Kelvin's question. Let me pull out my numbers. If I'm not wrong, at least now, I think my US position makes up 30%. So my Chinese position is around 70.
So like not as bad as I thought. Like because some other YouTuber, they were like 100% in China.
150, you mean?
Then they call themselves value investor. And when US dropped to below, it dropped to a good value back in 2023, they missed out on the whole run out just because they were too focused on China.
Right.
Right. So my point is, even though China is a value stock also exists in US, especially during market crashes. But the main difference is that for US, right, the government is more or less aligned with the companies, sort of. Like you see the Nancy Pelosi, like her thesis is basically the same as Bunti. She bought a huge amount of calls back then. Whereas for it's hard to disturb the US stock market for the US. But for the China, the government can just say anything and it can just crash. So like when I see the GIC, their portfolio, right, they are just like 20% in Asia, which is the developing market. So I don't know, if you are investing so heavily in China for Chi Keng, what are you looking forward to? Is it for the rebound, or is it you're playing a long-term game when China is coming back up, kind of thing?
Okay, there's a lot of points. I hope I can address one by one, right? Okay, first things first, I think really we are talking about it from a perception perspective, right? We keep saying that, the Chinese government don't really care about their companies, and then the US government, everything, take care of shareholder. They have Wall Street in their back pocket. We are basically just want to pump until the S&P 500 goes until like 50,000 points or something, 10x from here. I mean, I have no doubt that it might 10x from here. I mean, just because of inflation. But if you really think about it, there are tactical moves by the government that basically hurt the company, but nobody seems to be saying that, the US government is killing the company. I mean, like, I think I'll just jump on what Kelvin said, NVIDIA. The recent ban on the chips, right, which front-loaded many of the Chinese companies buying. The Chinese consumers are buying how much percentage of NVIDIA's chips or not? I don't know. Maybe Bunting can give me a more accurate number, but I believe the number is between 20 to 30%. So NVIDIA came out with a backup plan, which is they modify the chips, and then because now Nvidia is still top of line, right? But then inevitably, it's probably gonna have a dent in the earnings. So of course they cite national security reasons and whatnot, but is this not basically trimming down the revenue or trimming down the earnings of these companies? That's my first question. The second maybe I give a second example of how they do it. I don't know whether you guys follow. I think for now there's still not much details. But another executive order that was signed just quite a few months ago was that I think Biden actually signed an AI kind of bill that says that he wants a broad stroke regulation on many of these AI companies. There's no details now, but I think I can make a similar argument in a way that, hey, it's the same as what the Chinese government is doing. Right? They just signed a broad stroke regulation about gaming. We don't know the details, but it seems like the market, I guess they're saying that Biden is a lame duck. He can't do anything about it because the Senate or whoever might block the regulation, or the execution might be 6:30. While the Chinese government, on the other hand, is trying to, whatever they want to do, they can do it. So I guess it's really all about perception management. I think all the governments in the world, like what Bunti said, they don't like monopolies. They like fair competition. But then on the other flip side of the story, Eric said, if you want to be dominant, you need to employ some of these practices. So it's always on the same coin. It's how we look at the coin only. And at least for now, the US government has a good reputation of protecting the stock market, while the Chinese government, on the other hand, couldn't care less. The stock market can go in the 3, 5, 10-year bear market for whatever they care. It can still be what. But that's on the US government side of things. Secondly, I think on my own investment about being all in, whether I got leverage on Chinese companies or not, that's a separate issue. Whether I'm 150%. But like what Kelvin said, I think I'm not married to the idea that I only can buy Chinese companies. I mean, we are all international investors. Back then, I was pumping on the table saying that I want to buy Meta also. Then Eric and Bunti still tell me don't buy because they're very bearish. I still have the video online. I think haven't the video is not removed yet. You all can go and watch the previous video. That time Kelvin was not in the discussion. But back then I was buying some of the big tech companies, Amazon, Meta, TSMC, Google, stuff like that. So I don't necessarily think that I must be married to a geographic region. So when I did a comparative analysis, that time US was indeed it just basically keeps going up, and then Chinese just keeps getting beaten down. I couldn't see a very nice risk reward, so I go into Chinese companies. And then when US came down, then I said, hey, okay, this is interesting. Then I bought US companies. But then it seems like US keeps going up again. Right now, I'm just holding my funds. I'm not buying, or I don't intend to add Chinese position because it's a huge percentage. So yeah, I mean, by the nature of contribution, just keep adding. In fact, I was also discussing with Eric the other time about REITs, right? So you see REITs also, not bad, what? I mean, the whole interest rate thing now saying that it's going down again, and then REITs had a good, nice rebound at the end of last year. We don't have to restrict ourselves. I think that's my main point on what stocks to buy or what equities or what markets to be in. Then to answer Kelvin's last part about what am I looking forward to, actually, I don't know. You know, this whole Meta thing, right? It's quite funny. A lot of investors, they bought Meta at lows, right? 100, 200, right? Wow, 250, sell, faster, sell. Wow, run first. I book in a 20% profit, I zao already. I mean, for me now, my Meta position is still here. I'm still holding, even though it corrected quite a bit, I think yesterday or a few weeks ago. I don't know. I find it quite hard to pull the trigger if I really like the company. I think many of these companies that I'm buying, unless I came in with the perspective that I know it's a speculative trade, meaning I want to bet on the reversion then faster sell out. For some of these main companies like Tencent, Baba, I was joking around with them. I don't want to say it out in the public platform because a lot of people will laugh. But I think I did say in the group chat that I do see Tencent as $1,000 stock. And people say, wow, siao, that $1,000 is 3x from here. I do believe that I don't know how long, maybe in the next 10 years, it will hit $1,000. I mean, for Baba, I have my own price target as well. But yeah, I think I just don't have the drive or motivation to say that I want to faster sell the stock, then I buy a new one and then faster roll my money, because I do believe many of these companies that I hold, Baba, Amazon, Meta, TSMC, Tencent, they're all good companies. Why I need to faster earn 20% then pump to another stock again? I think that's something that I haven't get to appreciate yet. So I hope I answer your question, even though it's a very long response.
Nice.
Actually, I just want to quickly show these charts here. I think I produced similar charts on S&P 500 last year, and then this year was like just play for fun, and instead of plotting S&P 500, which is quite boring because I've looked at that for so many times right now, I plot the Hang Seng index lah. So I think what we discussed just now about, like, investing in Chinese companies, I think let's all just agree that right now, Chinese companies, Chinese stocks, or Hang Seng Index, Hong Kong stocks, all this, right, is like super bearish at the moment. And if you look at this chart, right, it's quite clear that why people are so bearish about it. It's like, even, let's say, Chinese regulator come up and say something, and even there's no impact, people will still take it as negative because the entire stock market is negative, and then they have some like they have ability to affect our emotions, and we sway by it, meaning that whatever Chinese regulator come up must be something that's negative, because we are all bearish already, affected by the stock market. You see, 2018, right, it's like at -10 to -20%. And then after that, there's one green 2019. After that, followed by, like 3 years consecutive, like 2021, 2022, 2023, it's all negative. So I think generally, when you look at stock market, if you have so many years of like negative, right, people will become negative. They will just look at everything and say, okay, Chinese is uninvestable, which we have been observing also, right, in some of the chat group. People are saying that, okay, don't focus so much on Chinese stocks. Let's just invest in US, because US green is good, right? But come back again. Let me show one more time.
Sorry, the Hang Seng thing, right? That's a good. I just did a quick calculation, right? Basically, I think 66% of the time is green, 33% of the time is red, based on the number of boxes, lah.
Yes.
But
So
for the last 3 years, it has been 3 consecutive red.
Yeah.
If that's how I read it.
Yeah. So let's say if we really like agree that, okay, now Chinese regulators, they are crazy already. They just want to whack capitalists, right? They just want to whack business. So should we expect that, like, subsequent, let's say, 10 years, right, they will all fall under the left hand sides in the bucket? But if you look at historically, right, it's not the case, right? Because you've seen that there are still quite a number of boxes that are on the right side. It's just that the recent years, from 2021 to 2023, we don't see it green now. So that's why I think there will be a time for Chinese stocks to rebound and sentiment to improve. I believe so. Like mean reversion, it will be the thing. It's just that I think for those who invest in like Chinese stocks over the long term, right, what they want to know is that the attitude of the regulators, or the attitude of the governments, how would they behave over time? Because it seems that sometimes when they are very determined to do something, say for example, when they determined to bring down the housing prices, right, they really step on that, and very determinants, like they really whack the housing market until like many companies just go bankrupt. So, and this one will have some spillover effect on other industry as well. That's why we have seen that the economy isn't doing that good. But I think for a long-term investor is that you should look ahead, like is that like coming 1, 2, 3 years, is this a good time to position yourself? And then so that, let's say, 5 years, 10 years down the road, when the sentiment come back, when everything normalizes, you at least have a premiums, decent returns out of this. Because judging from my own experience is that, like even my portfolio investing mostly in Western companies, right? Actually, most of the gains are not from the period when everything looks good. Most of the gains are from positions that I added during the drawdown, for example, during the COVID drawdown, or over the period after 2022 drawdown. Those positions, doesn't matter I add like a lot or add a little bit, right? Those positions are the one that make money, and not the one that we bought during good time now. So question is all these Chinese stocks, is it a good time now? And I think slowly I have a sense that probably yes. That's why I also think that, okay, maybe it's time to add a little bit more, just to rebalance a little bit more back into all these Chinese companies now. I mean, this is all about allocations, not so much about like predictions, because yeah, I've learned that predictions, we will always get it wrong now. Yeah.
I give you another reflection point. Just when we're on this topic. So it has been 3 years bear market. I look forward to what 2024 comes, but I wouldn't be surprised there's another bear market. So that's a 4th year in running. Emotions is a very big part. We see a lot of people come and go. I mean, even on my YouTube channel, because I primarily cover most Chinese companies, right? We see names come in, go out. We see people trading in and out of Baba. We see people trading in and out of Tencent. We have people that that are diamond handlers like myself. So we entered at a decent. I mean, we didn't enter at all-time highs, but we entered at like 半山腰. So we entered at the halfway mark, and then have been averaging down, right, for the last 2 years. And then you see people getting exasperated. People, wow, tired. What's this nonsense? Why other people do this so well? Tesla keep going up. I don't know. TSMC keep going up. Nvidia keep going up. Then what I'm doing is I'm just basically stuck with this position. And then it keeps going down and down and down. It keeps grinding downwards. It's a very hard pill to swallow, but I guess that's part and parcel of investing, right? If you don't have the patience, then you won't enjoy it lah, because all you're doing is you're just jumping in and out of positions. And it's not an easy ride. So that's why people keep telling you to just buy index. Because if index go down, you know that you close your eye and then you hope that it will come out in the next 10, 15 years. At least for the S&P 500 lah. So that's the perspective of my reflection on. I've seen a lot of people come and go. It's not an easy thing. I honestly now I also don't even know whether mine is a bias where I have some sort of sunk cost fallacy, or whether I have a conviction, or whether I'm just ignorant, or whether I'm just stubborn. To be honest, at this point in time, I also don't know. But at the end of the day, I do still like to think that I'm fairly logical. At least there's some logic in my ideas lah, and I'm still sticking to it. Of course, it might be a lost decade for me. Then so be it lah. It's a learning process, but I'm still fairly optimistic and confident that I'm in good companies lah. That's my baseline. I think I saw this very interesting LinkedIn article from one of the founder of asset management firm. I think it's called Redgate Asset Management. I'm just going to quickly read out something she said lah. It's basically a fund management thing lah. So she said, as a China manager, we are not scared by Western sanctions. We accept that it is a process allowing China to learn and to grow. We follow the logic of the sanctions and exclude the related sectors or companies from our investment universe. However, we are frightened by our own policy changes. No one wants to live and work in an environment of uncertainties, with policy crackdowns in week 1, followed by 5 supportive methods in week 2. So we don't expect Chinese ministries and commissions to operate as precise as the PBOC, but given the size of Chinese economy, please don't behave as if you are running a small village. So I think that's a call out to the people that basically screwed up in the middle. And this came out before. So this came out actually, I think 1 week ago. So this came out before the person that got beheaded lah. Not beheaded. That's a very sensitive term to use. The person that got axed from the position. So yeah, I guess that's basically the sentiments around those investors in Chinese investors or the Chinese fund managers. So yeah, I hope it provides some sort of context and different perspective lah than the Anglo-Saxon media.
I just want to give one last perspective lah. I think for China, they are very efficient in what they do. And that's why the market is crashing, because they are just weeding out all the bad actors for now. So all these things like the gaming, all these things, okay, like it's like maybe it's a bad thing for gaming companies, but it will benefit the country in other ways. Whereas for US, I think it's like what Chi Keng says, like there's a bit of propaganda going on, where you see US news bashing China in basically.
I hope that rounds up the entire discussion, and we'll see you guys in the next video. Goodbye.